Good morning everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Thursday the 10th of October, it is the day that we see the trade talks between the US and China really kicking off, and what we have is a mild dollar corrective move that is starting to come through. Now what we've seen is a whole load of mixed reports actually about how the talks at lower levels have progressed throughout the early part of this week before the top level talks kick off today. Now the suggestion is that perhaps the US is willing to bend on certain things with a view to getting a mini trade deal over the line, suggesting it would be willing to abort the trade tariffs if there was a currency pact, and suggestion that also the two sides would possibly come to an agreement with regards to that. Now, how China responds to obviously the blacklisting of certain Chinese companies and organisations is going to be very interesting. Also, the US is willing to allow certain companies to supply to Huawei as well, which will be a very interesting development. So there's a lot going on in the trade talks and a lot of back and forth and a lot of speculation, but at the moment there's a very slight risk positive move. You've got the euro, which is gaining ground, but it's nothing really decisive, and I think it's going to be just throughout the today and also tomorrow, where the talks are set to resume, is when we get the market moves. But a lot of volatility likely to play out on the back of this. Now, volatility as a general rule is still elevated across the last few weeks. It's VIX volatility back around that 20 mark, so it suggests that markets are still pretty well attuned to volatility at the moment. And also, as I said, that dollar has slipped back. We've got treasury yields which have just marginally picked up, which is, in the last couple of sessions, which again reflects a little bit of a more risk positive move. And you can see that the yuan, the Chinese yuan, has strengthened slightly today, although off the highs of the day. Yeah, there's just the market's on tenterhooks, and I'll show you the technical implications of euro back above 110 big figure, and we've seen that an interesting move that could potentially be coming on sterling as well, but also gold holding ground. So lots to talk about in the chart analysis videos. Now, in terms of data points today, we've got a few tier 1 data points coming back in. We've got the UK growth for monthly growth for August at 9:30, expected to be flat on the month, and that would be a slight tick lower on the year-on-year data, back to 0.9%. We've also got industrial production for the UK, just remaining on year-on-year basis at negative 0.9%, and also the trade balance expected to deteriorate slightly, the deficit back to 10 billion pounds there. And then into the afternoon, we've got the US CPI, which is the main data point today, expected to be remaining as is, really. The core basis 2.4%, the headline at 1.8%, although that actually is a slight tick higher on the headline, but the core basis remaining at 2.4% on the CPI number. Now, we're also looking out for weekly jobless claims. Where are they? Scroll down. Weekly jobless claims to stay at 219,000 jobless claims there. Right, so that takes me on to my chart of the day, which is Euro-Canadian. Now, EuroCAD has just been improving actually in the last couple of sessions, and we've started to see a bit of a consolidation turn into a renewed upside move. Now, that I think is potentially coming into a flag pattern, a bull flag, and you get that on a close above 46.75, but immediately that comes into the resistance at 47.10 area. Now, between 47 figure, 47 sort of 15, 47.20 has been turning points, pivot points, numerous times over the last few months, and that is clearly a key resistance overhead. But having broken this downtrend, you've also now got the, as I said, the market on the brink of closing higher above that 46.75 resistance, which would be a 3 to 4 week high. You've got the RSI already sort of gaining ground above 50, at multi-week highs. MACD lines similarly, as are the stochastics. So this is a market that looks like it's positioning for the upside move, and you can see that on the hourly chart as well, where we're starting to gain ground. That resistance at 46.75 isn't all that strong. It was just a spike high, so the market is certainly gaining ground now. You've got a mini breakout area around that sort of 46.45 area. You could argue 46.15 is today's low, and as long as the market continues to hold above 45.70, I think that there is a continued recovery that we can see that is developing here on Euro Canadian. So this is a chart that I'm certainly looking at, and if you get a closing breakout above 47.10, then that constitutes a small base pattern and a continued recovery, and that would be a fairly sizable turnaround actually, and there'd be the first real recovery potential that we've had for a while on Euro Canadian. So that would be a key moment potentially. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.